Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series with leading investors, creators, and thinkers. And our goal on these SALT Talks is the same as our goal at our SALT conferences, which is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And we're very excited to talk about some of those ideas today with Mr. Greg Gibb. Greg is the chairman and chief executive officer of Lufax, and he's been in that role since December of 2011. Before joining Ping An, Mr. Gibb served as the global senior director of McKinsey & Company, and subsequently the operating director of Taiwan Taishin Financial Holding Company. He has more than 20 years of work experience in both multinational and domestic companies of the financial and investment industries. He obtained a bachelor's degree in East Asian Studies at Middlebury University. Mr. Gibb was introduced to the National 1000 Foreign Expert Plan of the Organization Department of the CPC Central Committee in 2012, awarded the Shanghai Top 10 Financial Innovation Figures of 2012 award, and honored as the China Top 10 Leaders of Internet Finance in 2013. For his unique and widely recognized insight about innovative financial services. Mr. Gibb is the author of two great books, Banking in Asia, The End of Entitlement, and Banking in Asia, Acquiring a Profit Mindset, which introduce bankers' development opportunities in Asia. The way this talk is going to go today, Greg is going to give a presentation about the future of innovative finance in China through the work that Lufax is doing. And then we're going to host a Q&A session after the presentation with Anthony Scaramucci, who's the founder and managing partner of Skybridge Capital, which is a global alternative investment firm. Anthony is also the chairman of SALT. And with that, I'm going to turn it over to Greg first to give a presentation about Lufax and the FinTech ecosystem that's building in China. Go ahead, Greg.
Right. Thank you, John. So I'm going to move through pretty quickly here, but I know we have some time for questions at the end. If we can just go to the next page, really the story of FinTech in China is first world technology meeting emerging market need, and really trying to address a lot of unmet requirements of the market here. And we really try and make our retail borrowing and wealth management easier, safer, and more efficient. So that's kind of our positioning in China. If we go and sort of look at our unique positioning or our highlights, it starts with the fact that we really focus on two core segments in China, small business owners and the middle class for wealth management. And these are two very large markets that are evolving quite quickly. The way we do it is through a unique capital light hub and spoke model, which I'll go through. And the entire process end to end and all that we do is really very tech and AI driven. And this is really tech that allows us to select the right clients and match them to the right product in a totally digital environment. We do benefit a lot from the fact that we're part of the Ping An group, and Ping An has more than 200 million financial service customers here in China, and that creates a lot of synergies for us. And our team, we're talking about FinTech, our team is quite unique in the fact that we're very deep on the fin side, probably deeper than any other platforms that are operating here in China. Everyone knows China obviously has been the second largest economy since 2010. The areas that we focus in, number one, is small businesses. So we have more than 100 million small businesses here in China that make up 60% of the GDP. So it's a big part of the economy. And then on the wealth side, you can see that the personal wealth in China, on the last page, is about 25 trillion US. And almost 40% of that is derived from the middle class, who has very quick needs emerging as the economy evolves. If we look at the underlying of what's driving growth in China in these spaces, for the small business owner, the key issue is availability of credit. And you can see here that the leverage ratio in China is still lower than the US. Small businesses, in terms of their loan balance to income ratio, is 27% versus 41% in the US. And the availability of financing to these small businesses, particularly those that don't have collateral from the banking system, is quite poor. So there's actually huge unmet need, and that is really need that we're tapping. And just to be very clear, what we're doing here is we're serving the individual who's a small business owner, but the money that we lend is used for their business. And this is really kind of a unique space here in China that allows us to grow north of 20-25% in this area. On the wealth side, everyone knows savings rates in China are very high. What's very interesting, though, is the financial asset formation is still very low. So about 15% in financial assets of total personal savings versus 74% in the US. And so we have a situation here where a lot of the Chinese wealth is still sitting in deposits. But that is really mobilizing. You know, you've seen a lot of headlines over the last year about asset managers trying to get into China. And that's really because the regulations are pushing for capital market development and pushing retail to go into those markets with a lot of new products. So you have a big shift in wealth in addition to growth. So this is a space that the AUM in the market, particularly online, is north of 25% growth probably for the foreseeable future. So quite a large foundation. If we go here, I just want to talk a little bit about how we play. So in our two core spaces, starting on the left here with retail credit facilitation, what we're doing is sourcing small business owners. We're evaluating them and then through our tech platform, connecting them to more than 50 funding partners real time. So the whole process, once we've contacted a customer, everything is done digitally. The evaluation and the funding of that loan takes less than 30 minutes. And that is all connected through a network of more than 50 partners that we work with to get that done. And again, through the sourcing, the underwriting, and eventually the collection, all of that is done digitally. And what we're doing here is really providing larger tickets, longer term loans to this group of customers. And we benefit a lot from the fact that we've been doing this for 15 years. So we've accumulated a lot of proprietary data that really allows us to make those risk decisions. On the right-hand side here, we have our wealth management hub. Here, what we're doing is connecting the rising middle-class investor to more than 400 product providers. And here, the tech is really about doing the matching, is getting the customer into the right product. And increasingly, those products are all capital market driven. So as they have daily volatility, then following up with content to give customers the right direction, so they're building the right portfolios for themselves. And so this whole process is done and recorded on blockchain to really make sure that customers, in terms of suitable selling and everything, is well tracked, and you can handle anything that happens as the markets evolve. If we go to our market position, so in retail credit, this space, we're number 2 in the market. And this goes back to June last year, where we had about 500 billion renminbi in loans that we had helped facilitate. And that was in the first half of last year, generating about 24 billion renminbi. Oh, sorry, 24 billion renminbi. What's interesting here is everyone always asks us, how big are you next to Ant? Because we're number 2 and Ant is number 1. So Ant is roughly 4 times our size at the same time period here. What's interesting, though, is we were generating about 80% of their revenue. And so this starts to speak to the dynamics of, given the segment that we're serving and the way we do it, it generates a very high profit margin. On the wealth side, we're number 3 in the market. With that period last year of June, 375 billion in AUM. And that's about 500 billion in trading volume on the platform. So we're in a very strong market position in a space that continues to grow quite quickly. If we go to page 10 here, again, the comparison with Ant, because whenever I have a chance to talk to investors, half the questions are, how do we compare with Ant? And so I'll just take a second here. If you look at the borrowers that we serve, our average ticket size is roughly 20 to 30 times the average ticket size that Ant serves. So we're really helping small business owners, provide them funding to manage their business. Ant has really built themselves around small ticket, shorter duration consumption loans. And so there's a very difference in terms of segment and size. And there's a similar story on wealth management, where our average investor is about 4 or 5 times the size of an investor on Ant. So that's one big difference, is really segment. The second is we really are deep in our focus for the retail credit and for the wealth management. And Ant obviously is a super app. So they're covering a broader space. We're very focused, whereas they're broader. And if you look along the bottom here at pre-tax margins, over the last couple of years, we've always been north of 30%. So we grow at nice double-digit levels, but we've always sustained that 30% plus pre-tax profit margin. If you look at the right here, Ant has obviously grown very quickly, but as they have many different businesses ranging from payments to insurance to other super app functions, they have to double down and invest often as they build their businesses. So they've had a much greater degree of volatility in their net margins over time. So there is a difference of profile in terms of how we've grown over the last couple of years versus Ant. If we go here, I just want to go a little bit deeper into how our platform works. So we're talking about small business owners. These are customers that we're serving as individuals. So all the lending is to the individual. They typically will have 5 to 20 employees. Their typical annual revenue would be $1 to $2 million or less. So these are really kind of micro businesses. But these are very interesting individuals in the sense that a lot of them have life insurance policies. 60% of them own 1 or 2 properties, individual properties. But 60% of them also have not been able to get an unsecured loan from any bank in the last 5 years. Banks in China really only want to serve customers who have collateral. And obviously, Jack had his famous comment about how he saw the banking sector, which I won't repeat here, but it is an issue that these small business owners really don't have access to capital without collateral. And so we're really serving them mostly with an unsecured product to meet their needs. And the typical loan size is about 25,000 US, and the typical duration is about 2 to 3 years. So we source these customers. We do actually have a very large offline sales force of about 60,000 people around China. We also work with Ping An, who obviously has a very large set of insurance businesses that helps refer customers offline to our online platform. And then the hub in the middle here basically does all the analysis, does all the connection to the funding, and then follows up on collections. And on to the right here are our funding partners. So we work with more than 50 banks, more than 5 trust companies, and a number of insurance companies to provide part of the credit enhancement in the model. We take about today on new loans about 20% of the risk. And the other 80% of the risk is borne by either our credit enhancement partners or our funding partners. Just to talk a little bit about the data side of this. So, we spend a lot of time really evaluating that individual, and we also spend time evaluating their business. And we built up 15 years proprietary data to do that. And that's all going in, obviously, to our database. And we're constantly using machine learning to refine how we judge risk for these individuals. We price the loans today anywhere between 15% and 24% APR. And again, those credit decisions with our models today are all made now in a matter of minutes. We actually don't take any information, physical information from the customer. Everything they do is authorized through the app. We then scan all of the data that we have and then make a decision. And increasingly, if there's an interface with the customer to ask them a few more questions, if we need a little bit more understanding, that's all done with AI robots today to drive that interaction. Our sales force, obviously very large offline, but we direct them to where we think the best customers are to help get the right quality. And then when it comes to collections, a lot of that is done today by chatbots and differentiated with the data. So maybe just give you a feel of how this kind of looks today from the perspective of a customer, a small business owner applying for a loan. So we'll play a short video here so you can see how the process works.
As the retail credit facilitation platform of Lufax Holdings, Ping An Puhui always strives to provide innovative solutions to our massive client base. Ping An Puhui introduced the first AI plus video loan application experience in the world by leveraging several technologies to create a redefined borrowing experience for every customer.
请问有什么可以帮您？
最近我的餐厅需要资金周转。
好的，请出示您的身份证。李先生，请您授权我司查询人行报告。
同意授权。
经审核，您的额度提升至20万元。
Seamless credit approval supported by our personal and SME big data-based credit inquiry platform, making loan applications more efficient.
请问您的餐厅地址在哪里？
在上海市徐汇区龙华中路759号。
请问您借钱用来做什么？
用于餐厅的翻新。
您的餐厅营业金额大概多少
3到5万的样子。
恭喜您审批通过。
Our intelligent voice recognition technology frees our customers from any text input. Our multiple cutting-edge anti-fraud technologies and AI instant approval help achieve a frictionless customer credit application process and zero waiting time for every customer.
您同意借款协议吗？
同意。
您已到账20万元。
Our AI customer service is able to provide real-time assistance and give customers a secure application process. Video 3.0 Ping on Puhui, redefining the loan application process with AI plus video technology. Lufax Holdings, better technology, better financial life.
So what you saw on the app there was actually our chatbot. So that's not a real person who's really driving the interaction. Because what we want to do increasingly is just be able to ask customers a series of questions that we then validate with more than 50 million data points in the background in terms of this proprietary capability we've built up over the last 15 years to help make a credit decision. One of the technologies we do apply while they're interacting with the app is when we're asking them questions is facial recognition and lie detection. So if the question is being asked and the answer looks a bit strange in terms of their facial recognition, that goes into the credit decision. So it's really a very tech-driven application. And that really flows through also to how we source the customers, how we drive our sales force to go into various cities, into various parts of the cities to try and find customers that have those needs who we think will also be good credit. So we kind of start that from the upfront. And then collections, we do have 9,500 collectors in 9 centers. But most of the collection is driven up front by chatbots, and then for the harder cases, a human will come in as needed. So really the end-to-end processing here is all driven off of our platform. A point here on data. There's a lot of debate about what types of data can you use today to really make good credit decisions. And we break data into 2 types. We break it into sort of what we call hard credit and financial data, which gives you some sense of the person's background and how they've bought insurance over time, how they paid their bills over time. That's what we call financial data. And then there's behavioral data, which is e-commerce data, social data. And when you're making a credit decision, you're really looking at 2 angles. The first is the person's willingness to repay, and the second is their ability to repay. And what we find, and you see these 2 bars here on the left, when we're making the first part of the decision on willingness to repay, both financial data and behavioral data are very useful in the model. So financial data here is weighted at a 58% and social and other data at 42%. But given that we're making longer term loans for larger amounts, when it comes to the predictiveness of what is going to, this person's ability to repay, then the financial data in our model gets weighted at 92%. And so this is really unique because very few, or really most of our competitors, do not have the degree of financial data that we have over these 15 years refined around this customer segment. Our other tech platform competitors do have a lot of behavioral data, but we found that behavioral data is really only effective for small short-term loans. Because when you're making a large loan, what really matters is ability to repay. And so that's really our unique underlying capability here to serve this segment. And it's very hard for others to replicate what we've built in terms of that offline to online sales capability, then having the data to really make the right credit decisions, and then having funding partners who trust your data capabilities and analysis to then fund those loans, or in the case of our credit insurance partners, to provide the credit enhancement. So this is really what we've been able to tie together over a number of years. If we go to the wealth side, what we're doing here is the middle class in China is a population of about 150 to 200 million people. And the customer where they're serving typically has investable wealth of anywhere from $5,000 up to about $500,000 US. So they don't quite fit into the bucket yet of being high net worth. When they go to a bank, they're not getting served by a private banker. They're still really only having access to counter services. But these customers, when they start to have a couple $100,000 US, they actually need to figure out how they're going to invest for their retirement. There's been a lot of change on the regulatory side in China where the whole wealth management market has shifted and is shifting from purely fixed income to customers really having to start to explore equities and build portfolios and get the right diversification. And it is a challenge because today when people buy mutual funds in China, if they buy a fund directly, the average holding period is about 100 days. And when you start to get them into portfolios, we can get that up to 200 days, 300 days, which is obviously critical to generate a healthy return. So what we're doing on our platform is connecting these customers entirely online. And then we have 400 product providers in the background. And it's really using the data on the customer and the product and the markets to drive matching, to really get them to the right product and the right portfolio over time so they can start to generate those sustainable returns. Because in China, fixed income and interest products, a lot of the money, still 50% of it being in deposits today in China, obviously the rates are going down. And so if a Chinese retail investor wants to beat inflation, they have to now gain exposure to capital markets. And so that's what we're really doing here is driving the reallocation of that wealth and giving the customer a service level that they would normally get by the time they're a private banking customer. But we're giving them that expertise in an online environment at a lower entry point. And there's really relatively few platforms that focus on this segment. Our large competitors typically, who have a larger, broader customer base, are typically serving the more mass market. And it's really through expertise that we're differentiating for our target group. The entire process that we have on the wealth side has a lot of data on the customer to really figure out what their wealth level is, what their risk tolerance is. And we're matching that with a lot of data from the product side. And then we're doing AI-driven matching. We have 8,000 products on the platform. Customers don't want to see 8,000 products. They want to see the 2 or 3 products that are relevant to them in the current market condition. And increasingly, we're using that data and our knowledge of the customer to get them into portfolios so they can get more diversified, so they can drive up those holding periods. And once a customer goes into a product, we have chatbots that will nudge them, which will remind them of things they should do or not do. We also do social comparison to say, what you're doing is similar to people that are similar to you. You're better or worse in certain ways, right? You have too much concentration risk. You're actually doing a better job in certain areas to really educate the customers on how to better invest. And the whole process of what the customer does with us on the app, everything that they see, every box that they click, every contract that they agree to is all recorded on blockchain. And this really helps us ensure suitable selling throughout the process. You can't face a situation where a customer buys a product 6 months later, they lose money and they said, I didn't know. And so really having that capability as an independent verification is critical in the regulatory environment as well. So all of this is done in Lufax, but we do benefit from being part of the Ping An ecosystem. And Ping An obviously is a huge financial platform in China with insurance, banking, securities, et cetera. It invests very, very heavily in technology, facial recognition, voice recognition, AI, chatbot development. And so we have early access to that technology. We have our own, everything we do with the customers, our risk, our interface is developed by ourselves. But behind that, we benefit a lot from the big investment that Ping An has in technology. Obviously, being associated with Ping An from a brand perspective is very, very helpful and helps drive down our acquisition costs for both borrowers and investors. And then given the amount of data and experience that Ping An has, we can test our models against a broader base of customers by the time that we roll them out on our platform. So the synergies we gain here, from analytical insights that we gain here are substantial and a big benefit for us. Finally, on page 18 here, obviously regulation in China FinTech is a big issue. And I think what distinguishes our team is we do have very strong technology, but we probably have the deepest bench in terms of financial DNA of having that expertise internationally, domestically, to continue to revise our strategies and the way we operate to meet the market needs, but also to really anticipate the regulatory environment. So maybe I will stop here and we can move into questions.
All right, fantastic. I'll let Anthony start off with the questions, but I have a lot of questions for you as well. It's fascinating stuff that you guys have built over there, Greg.
It's a terrific presentation, but also congratulations, obviously, on the company. But my first questions are somewhat U.S. centric, if you'll forgive me, because we really want to make this introduction, Greg, to the U.S. investors, among other investors, of course. But how has the Chinese economy evolving? How is it evolving in terms of small business formation and household affluence, even prior to COVID-19? And what impact has the pandemic had on those trends?
So the issue for small business owners in China, pre-crisis, pre-COVID, and today remains very large the same, which is they're a very big part of the economy, but a lot of them just cannot get funding from banks. What's happened as a result of COVID is the policy push around small businesses has increased. So what we're seeing from our funding partners is a lot more demand for more asset, particularly in that small business space, because policy is driving them to do more of it. Our funding partners here, Anthony, are small, medium-sized banks. They don't necessarily have the national footprint. They don't necessarily have the scale. They don't necessarily have the data in order to be able to serve these customers without our cooperation. So the COVID impact has been that the banks, given the policy changes, want to do more business with us. What we've also seen, particularly on the wealth side, that wealth formation, with all the things that people typically talk about with China, right? The growing urbanization, the growth of the middle class, all that stuff. What we saw happen in COVID, of course, was a much accelerated move to online. There was in China as well a couple of months where people couldn't go to banks, didn't want to go to banks, and then have come to us much more dramatically online. Obviously, the stock market in China, despite recent days being down over the last 12 months, the average mutual fund return last year in China was north of 40%. So you've seen a real drive, again, with the stimulus packages that have been going on around the world, of accelerated online trading and investment behavior. So I think things that were true before COVID are still true, but there was an acceleration of some trends there.
You talk a lot about the differences between the consumer and household financial behavior related to debt and investing. So how would you compare that between China and the United States? And are there cultural forces that are unique to each country?
I think it's harder to say that there's cultural differences. I think as people get wealthier and as people have more businesses or they have more retirement concerns, China's regulation and people's behavior does look more and more like rest of world over time. I think that the biggest differences are with the small business side is that in the U.S. retail banking, small business related banking has developed over the last 50, 70 years, right? It's quite well developed. In China, retail banking is kind of 20 years old or less. And most banks really don't specialize around small businesses. So it's really a supply side difference, I would say, in China for the small business side. On the wealth side, the biggest difference is really this. Most of the wealth product in China over the last decade was essentially debt to real estate companies, repackaged as wealth products. So it was a fixed income market. In the last 2 years, under the central bank, all these policies have come out to really make all product standardized and to basically be tradable on the exchanges. And so wealth is being pushed from the debt side really to the equity side. And so this is driving a huge shift. If you look at the United States, what percentage of savings are in equity or mutual fund products, I guess it would be north of 30, 40%. In China, that number is less than 10% today. So there really is this huge shift that's being driven by policy. And frankly, what China is trying to do, what the overall regulators are trying to do in China is improve their debt to equity ratio. And given that retail money is such a big part of the equation here, they're trying to get less debt on the books and really build up more of the equity side. So there's this huge shift in the way that wealth is being driven.
Talk about AI for a second and the role that it plays in the underwriting process and what conditions in China make it a leader in the development of AI.
So really over the last decade, particularly with the huge penetration of mobile and mobile phones. There's obviously been a huge amount of data that's been acquired throughout the society. Obviously huge, fast-growing e-commerce behaviors and the rest. And that data, has been increasingly used and tested against important decisions on evaluating customers and product and risk. And so the huge availability of data on a very huge population, now acquired over a decade, has really allowed platforms like ourselves to use a lot more variables that allow you to judge risk in an online environment or a mobile environment that wouldn't have been possible, 7-8 years ago. But also this data is changing, right? China's obviously a huge place. The provinces are very different, right? The economics across the provinces are very different. So you have to be able to tune for different geographies. You have to be able to tune for different customer segments and be able to do that dynamically. So the availability of data, the deep penetration of mobile, and then really the experience now to be able to do that in a totally digital way with very high efficiency just keeps churning on itself. And so with the machine learning and everything, you're getting a lot of optimization throughout.
You talk about, how does the relationship with Ping An make you well positioned to tackle the financial needs of the Chinese consumer? Tell us a little bit more about that relationship.
Sure. So Ping An, as you may know, has started about 34 years ago in China. It's one of the largest insurance companies in the world now, but it has 27 different financial licenses as of recent count. So it's very deep and broad across the market. People that have Ping An insurance and the like are typically these middle class consumers. A lot of them are small business owners. So that foundation gives us a lot of access to very good customer. Given they've been operating in these spaces for 20, 30 years, it also gives us a lot of good data to tune our models. And it also has a very strong brand. But increasingly in FinTech, the issue is also regulation, right? So the relationships that Ping An has built over the last 30 years with regulators as a trusted party, the way that it handles all kinds of compliance risks and credit risks, is also very important to earning trust of those that you're working with. So, Ping An is a huge brand advantage. It's a huge technology advantage. It's a big source for efficient acquisition of customers, but also increasingly, it's a very important base of trust as you deal with regulators as they're kind of redesigning how they want the future to look.
Chinese regulators have recently adjusted rules around microloans and bank internet lending, which most notably shelved the IPO of Ant Financial, which we both know. But can you explain the reasons for that regulatory decision and what impact, if any, it has on businesses like Lufax?
So basically, over the last 5 years, platforms like ourselves have started to provide a lot of the facilitation for credit in China for retail, for small business owners. And the regulators were looking at this and saying, okay, so you guys are sourcing the customers. You claim to have great data models. You claim to have the risk under control, but the funding is coming from our banks. And do our banks really know enough about what's in the black box? At the end of the day, the banks are the ones that have to hold the capital. It's the financial institutions that are bearing most of the risk. So, this has been an issue that the regulators have been watching for a couple of years, but really September last year, the regulators started to signal to people like us that we want you guys to have skin in the game, right? Yes, the funding can come, majority of the funding, 70, 80% could come from financial partners, but you as a platform need to bear 20 to 30% of the risk. And, you've got to bear the right capital behind that risk as well, because if you get it wrong, we want you guys to share the pain and make sure that there's therefore no moral hazard as a platform developing very quickly, that, you basically grow very quickly and then someone else has to take care of the problem.
What did I miss, John Darcy? Anything? Pretty exceptional story.
Yeah, I got a few questions myself, Greg, if you don't mind. You talked about blockchain, how you guys are at the front of so many different movements across technology and FinTech specifically, whether it be using AI, using facial recognition for credit worthiness as a variable into credit worthiness. But the blockchain piece of it is very interesting to me. And in China, there's certain restrictions on things like Bitcoin, but China is very forward thinking as it relates to central bank digital currencies. They're digitizing the yuan, as most viewers probably know. How did you guys think about the development of blockchain? Why is blockchain technology for you guys the best solution? And what do you think the future of digital assets and blockchain-oriented technologies are within China?
So, as you move to a world where everything is being done through a mobile phone, and you're dealing with transactions in the tens of billions and hundreds of billions of dollars, and you've got contracts and you've got verification items that are very important, both in terms of verifying that the customer is who they say they are, that the money is from where they say it is, and that those contracts are agreed as they say. If it was just left to us as a private company to say, listen to us, we've stored it all in our database. If there's any issues, just check our database. People are going to challenge that heavily. And so really having the ability to not only as your data comes in that you're using to make decisions, but everything that happens on the platform to put that back into an independent place that anybody can go look at, right? If the regulators want to know what's going on, it's always there. And so that independence and the certainty that brings, and therefore the trust that it brings to a purely digital world is very important. And obviously China is a big and fast changing place. And there's a lot of physical paper that you just would never trust. If you went back 5 or 6 years ago, part of our credit process is people had to bring in income proof and, house ownership proof, all that sort of thing. And there was just a huge amount of fraud, right? And it really wasn't efficient. And so once you're moving to that blockchain to build the trust, to have that independence, and then to really enable the processing in all kinds of ways down the path, just basically helps create that essential trust across Chinese commerce that just is not as easily occurring in the physical world.
Yeah, it's fascinating stuff. In terms of the products that are on your platform, you talked about how you have a wide suite of products, but you don't want to inundate people with questions about what type of products they should be allocating capital to, and you use AI to match them. What types of products are on your platform? You talked about less yield-oriented products, fixed income products, and more equity type of products. What's the product suite that you have on your platform? What are you looking for in a product in terms of onboarding it onto the platform? And how does that matching engine work in terms of identifying what's right for an individual?
So there really are two parts to it, but starting with the product side, we have a broad range of products. So at the high end, you've got a private equity product on the platform. You've got 4,000 mutual funds or more on the platform. You have a growing number of insurance products on the platform. You've got structured products at various levels. So we're really looking at how to drive a rating of those products. And here we're looking at who's the provider. At the fund manager level, we're looking down to the level of who is the fund manager, right? Maybe a great fund manager changed yesterday, someone else is running it. That's something you want to know. And so having the data and being able to update that is what we really call know your product at multiple levels. And then on the other spectrum is the customer and really the KYC, which is kind of a broader KYC, which is really knowing what their background is. When we used to do this in the beginning, we would let customer fill in surveys. They still do. But what they were saying in the surveys and what we found through third-party data was generally not true. People who said they didn't have money often had money and vice versa. And so really being able to try and get a firm understanding of a customer's experience then determines what we show them on the platform. So if a customer really comes across to us as conservative, they're only going to see products that are right for a conservative customer. If we can get comfortable that the person is a qualified investor, does have substantial net worth, then they can maybe see private equity products on the platform. So it's really a screening process. It's then really a matching process. And of course, what product is right for the customer depends on what's already in their portfolio. It depends what's happening in the markets in terms of what to put forward, or suggesting other matches they need to have to get the right balance. So it's a very, very real-time processing to get you to those 3 or 4 products that really matter the most to you today. And it's really getting China to probably leapfrog a bit from being purely fixed income in the past to moving to kind of, the right portfolio strategies today. But a lot of that is happening in an online environment rather than, a counter by counter visit.
Right. Last question from me. So we have a friend of ours, his name is Winston Ma. He used to work for CIC, sort of in the venture capital wing of that organization. He wrote a great book about the phenomenon you were talking about earlier, where the explosion in mobile devices and the penetration of mobile devices within China gave rise to this massive data set that has enabled the rise of AI and this data-driven economy. Those are two sort of macro trends that have developed over the last decade. As you look out over the next decade, what are the major macro trends that you're looking at in terms of continuing to see around corners for Lufax? Is it something like quantum computing? Is it deeper penetration into something like blockchain? But what are the big technology trends that you have your eye on, or multiple trends in China and around the world right now?
So, I think at the end of the day, with financial services, customers still want a personal touch. They want the tailored advice. As products get more complex, as capital markets become more part of the solution, and there's more volatility, they still want someone to hold their hand. And we have to be able to, in an online environment, we have to be able to provide that increased touch over time, that increased expertise over time. And in our view, the only way to do it, we think the biggest driver, at least for the next 3 to 5 years, is advancing your AI so that you can make your interactions, you can make your chatbots, or how chatbots evolve into other service forms, to just make it very interactive, very personalized, and to make customers as comfortable as possible with the process. And if you think about how that's going to change the traditional financial industries, which are still heavily counter-based and individual-driven, right? Your ability to drive central control to really make sure customers are getting the best advice, that it's standardized, that it's tested, and that it's rolling out consistently, and doing that with a very high touch point at very low cost, is where we see, that's going to be a huge impact. It's going to be a huge impact because some companies will do it well, and there'll be a huge impact because the other companies who don't do it well are going to find margins changing very quickly. They're going to find customers' expectations on service levels changing very quickly. So, we do like the technology angle. We do like to invest in technology, but for us, it's really the application. At the end of the day, it's about service, and it's using that technology to create that personal service at a much lower cost point.
Well, Greg, it's been a pleasure to have you on Salt Talks. Anthony, do you have a final word before I read us out of here?
No, listen, I think it's an amazing business. You're intersecting a lot of things that are going on at the same time. You're innovating with AI. You're making things easily available over the blockchain, and you're obviously prepared for the future. And I would say that a lot of financial services companies, Greg, frankly, are not prepared for the future. They're operating off of an older model. So it's an interesting vision and a great business plan. Thank you so much for joining us on Salt Talks.
Thanks very much.
And thank you, everybody who tuned into today's Salt Talk with Greg Gibb of Lufax. Just a reminder, if you missed any part of this episode or any of our previous episode of Salt Talks, you can access them on our website at salt.org/talks, and also on our YouTube channel, which is called SaltTube. We're also on Twitter. We're most active at Salt Conference there. We're also on LinkedIn, Instagram, and Facebook. And please spread the word about these Salt Talks. I think it's fascinating to have people like Greg on the show who are in different parts of the world doing really exciting things and disrupting the traditional finance ecosystem. But on behalf of Anthony and the entire Salt team, this is John Darcy signing off from Salt Talks for today. We hope to see you back here soon.